Everyone's Rob Roy, Belly Wave Options, and welcome to this week's U.S. market updates just after the close on Friday, July 21st. We finished our live Q&A over on the Hub Financial channel a little bit ago. Some great questions asked. If you're interested in that, go over to the Hub Financial channel here on YouTube and register, and you can participate. Each and every Friday around 2 p.m. Eastern Time. We get on and talk a little bit about the markets and answer your questions. So it's a lot of fun. If we take a look at the chart of the market, no update last week, out of town. So taking a look at the chart this week, catching everybody up to date. Really, the main news of the week had to do with expiration Friday today, and then we had the rebalancing that was occurring on the NASDAQ. So the expectation was for perhaps some volatility in the markets today, dealing with that weird bouncing. We'll talk a little bit more about that in the Qs, but the fact that, we've had the Super 7 or the Magnificent 7, as somebody called it last night in our insiders meeting for our alert subscribers at evotrader.com. But they are rebalancing, so there was expectations of some weird moves. We had some slight moves down in stocks like Nvidia and some moves up and lesser bought-in stocks that didn't participate in that AI Super 7 move, like Texas Instruments, etc. But then that's really didn't turn out to be quite so volatile. So as we get back and look at the chart here, you can see that we just kind of really an inside day, closing most exactly on the low from yesterday. But if we take a look at this zigzag pattern here, I think it's pretty interesting to show the fact that we are at a point of resistance. So we look at this in the markets, and right there you can see we've gone up to the 61.8% level, and we've just kind of held there for the last several days. The question becomes now, do we look to move back to the next extension level, which would be the 100% level, or do we end here? I think it's important to note that on these zigzag patterns, when we look at the B wave correction, that fib level determines where the extended level will be. So the B wave corrected to the 38.2% fib level, you look for a 61.8% extension. That's been satisfied. So the zigzag has done what it's supposed to do. From time to time, we then move to the next fib level. Oftentimes, you'll get a retracement back to the previous fib level. We actually talked about that during the Q&A with the Qs, because the Qs have backed off to their 38.2% level. So they've done the first step towards the potential to move to the next level. But next week is going to be really interesting. We started earnings this week. We'll talk about a little bit about Tesla and Netflix here. If you stay till the end, you'll catch those towards the end of this update. But next week, heavy when into earnings, and we also have the Fed meeting. I saw some headlines where people were saying, oh, they didn't really believe Powell, who said there's two more coming. They're like, they think there's one more and they're done. So they're literally not paying attention to what the man's telling you. Now, I know the Fed, and I've been picking on them as much as anybody else as far as they're flip-flopping back and forth, but they said two more, and I think we're still kind of grasping at straws here, or hopium of a soft landing. I'm a little bit concerned about that. So I do think with the market at these resistance levels, having a little bit of caution right now is warranted. Taking a look at interest rates, backed off a little bit today, but a move back higher yesterday. We're still in this range. We got above that 40 level, the 4% level on the 10-year, and the same range. You've been watching these, you know this range better than anyone. I talked about it for so long. 34 to 40 was kind of where the sweet spot was, I thought, where even tech stocks could perform well, the market in general could perform well. Then we tried to break out of that, which was concerning, but it didn't hold. There was no follow-through day, right back down. And so we're back in this range, ticking back up yesterday, a little bit back down today. That'll probably move a bit with what happens with Chairman Powell. So maybe we stay in this range until the Fed meeting, and then that could be a catalyst to either move down towards the lower end if he sounds a bit more dovish than expected, or if he continues that hawkish stance, that might be enough to push us back above that 40 level. So something I think we need to keep a really close eye on. Looking at the dollar, wow, the dollar has been bizarre. On Tuesday night, we do Trade Finder. Tuesday night, 9 p.m. Eastern time. We talk to markets, we look for trade ideas, and we have a live Q&A. You can register in the link or go to our website, ewotrader.com, and register. As I said, it's free. We have a great community there. And looking at the chart of the dollar, we were talking about if the dollar came down to this 101 level and could break through it, because that's been support on the dollar for so long, that we might catch a bid in the metals. A lot of people in the Q&A that we do at the end of Trade Finder ask about the metals. It seems that people are looking at silver and gold pretty hard right now. Perhaps it's the fear of a recession coming, safe haven type, something along those lines. And so I said that, well, if the dollar could get through 101, we might catch a bid in the metals. Well, I didn't expect the dollar to go through vertically through 101. And then in this week's Trade Finder, we talked about how we probably need to come back up and test that 101 level. Well, the high on the dollar today was exactly that, 101. So we broke through it. Vertical moves often get retraced, and especially when you're breaking a major point of support like we did here at 101. So the dollar coming back and actually hitting 101. Now we can see if there's a potential bid in the metal. So I'm going to show you a chart of SLV here, and you can see how it's coincided with it. Now the belly wave pattern here has been disqualified, so we take the 5-wave pattern off. When the wave 4 goes to that passes the 78.6% level, it officially disqualifies the belly wave pattern. So that's been turned off. Now here's the bid that went into the metals as the dollar went vertically down, but that was the problem. I don't like vertical moves. So that was the sucker's bet, I think, to jump in then. And so as the dollar has now retraced back up to test that 101 level, we're getting really interesting now. I think I've been itching to get into the metals for quite some time. And I think we're getting to a point where it might be very interesting to go ahead and go long SLV, GLD, whatever your favorite symbol is there. So what I'm watching for as we move into next week, we've come back down. We got overbought on that vertical move down in the dollar with this vertical move up in SLV. 23 is resistance. So we came back off that because we got a little bit overbought from the 10-day moving average. Now, if we can break back above 23, so if the dollar holds there at 101, it starts back down, we should break above 23 in the SLV, and that'll be, for me, break above 23 with a follow through, a sign to go long. So been waiting on it for a while, so it looks like we might be there. So join us Tuesday night, and we'll see if we've gotten that trigger entry to move there. I did want to show you the VIX because, as I said, and then with the chart that you saw there, a lot of volatility was expected today with expiration, the rebalancing of NASDAQ, et cetera. And it simply didn't happen. It was a fairly quiet day, really. And here's the VIX back down towards the lows. Are we going to break below this 61.8% level? Last night in our insiders meeting that we do every Thursday night for our alert subscribers, we had talked about this doji on the VIX. And what did that mean for today? A move lower? Are we going to break below this 61.8% fib level, which would give a chance for a bid back into the market for perhaps one more final run higher, or are we just going to sit here and bounce off this 13 level? Well, there was no big move today, no volatility as they expected. Maybe that's why the doji was there, is just because there was greater volatility expected today than what materialized. But we are on the lower end, so that's worth keeping note of. We have gone lower, so move down to 12 wouldn't be that unusual. And again, that would give us the fib extensions on those zigzag patterns that we've been talking about. The Dow just smashing the Elliott wave pattern here in this tap box that we talk about. And that's why it's important. The Elliott wave algorithm, which this software, if you're not familiar with it, it's from hubb.com. I think it's the best Elliott wave software that exists out there. And it gives you these projections based on the Elliott wave algorithm, and it's programmed exactly to the algorithm as Elliott wrote it. So it liked this level here where the 5 was. This gives you kind of a margin of error, those two lines, and you can see the high yesterday on the DIA right smack in the middle of the tap box, so it nailed it perfectly. We are a little bit vertical here on the DIA. It makes you wonder, Is there some risk aversion going on here? Some money moving out of maybe some higher beta stuff in the SPY and the NASDAQ into the Dow? Because it's just interesting that we got such a vertical break. We've had this resistance. We've been talking about it here on these updates, right, at 345. But man, we just blew through it. We're a little bit overbought from the 10-day moving average, little rest day today. Maybe we get a little bit more of that. Next week, perhaps the entire market just rests as we wait for one of the more important Fed meetings in a while to see if Powell is going to maintain that hawkish stance. And the reason for that is we have gotten a little bit weaker inflationary data, right? The last CPI and PPI backed off a bit. So will they stay as hawkish? There's probably going to be a lot of interest in that. And then the Qs, we talked about this again at the live Q&A over on the Hub Financial channel. And so the zigzag pattern that exists here on the Qs, a couple different places that you can draw it from, a couple actually different zigzag patterns right now. So I thought it would show you the complex pattern. We showed the other one earlier, and this one has gone to 100% and is trying to back off to 61.8 with the potential to go to the next level. So zigzag's my favorite directional pattern within Elliott Wave, and you can just see these patterns that materialize over and over and over again, and that's why I like to watch them. So I thought I'd share something different with you than if you were viewing us at 2 p.m. for the live update. So you can see we're at some resistance levels and potential for the next levels to go and be hit, next fib levels I'm talking about. But you know, we've reached levels we talked about for quite some time as far as where Elliott Wave was forecasting the markets to do. They've been hit, even though a lot of you thought, no, there's no way, we're going higher. And yeah, there's been a lot of negativity, a lot of things to be concerned about. The yield curve's still inverted. That's a concern. I can't get away from that. I'm not totally in this whole soft landing camp. I think that that's telling us something, and we better pay attention to it. And at some point, and maybe a little bit later than what was expected, we're going to see the effects of some recessionary pressures, he tried to say. Looking at the IWM, once again, Elliott Wave all over it. There's that tap box again, so right to the upper end of the range here. And nice to see the IWM after how long break out of 190 again. Last time was back in early February. So we got above there. Now we couldn't hold it in February. And broke back down, and not only broke back below 190, but went all the way to the lower end of the range that we've been in for a while at 170, that 170 to 190 range. You know it well. And now the question becomes, do we hold above 190 at this point? This is a good indicator, I think, of risk on, some broadening of the rally. But if we are going to have a chance for the rally to extend in the SPY and the NASDAQ, probably the IWM comes with it. If it falls apart and breaks right back down below 190 again, falls through that support level, likely means that the appetite for risk isn't quite there, and that could be troublesome for the market. So lots to talk about, and I think we'll get a lot of answers next week. So make sure you watch next week with all the earnings reports that are going to be coming out and chat about the Fed. As promised, I said I would review Tesla. You know, we were having some questions about that in our insiders meeting last night. People did not understand why Tesla and Netflix fell so much on their earnings report. Tesla had to do with the fact that, well, a couple comments here. One in Trade Finder, it mentioned, because it comes up in Trade Finder all the time. Yeah, everybody talks about Tesla, right? So it's always on the mind of our alert subscribers as well as our viewers on Trade Finder. And I'd made the comment when we broke above this 280 level, it'd be hard to imagine getting this high and not touching 300. And the high was 299.29. Awfully darn close to the 300 level. I use that Star Trek tractor beam analogy. Just those big numbers tend to draw stocks to them. So we got right there. and then doom or boom down to the downside there on earnings. And it had to do with a couple things. One, mostly Musk's comments, and he said they're going to be shutting down some factories because they're going to be doing some retooling and updating in some of their factories. So the production is going to be less. There had been this bid to the upside. Part of the reason that we had moved higher here in Tesla was due to the fact that they beat their projections. They delivered more cars than was expected. And Elon's saying that ain't going to happen next quarter. The production's likely going to come off because they're going to be shutting down those factories for the upgrades. On top of that, some issues with the Cybertruck and getting parts and compression of potential margins with the competition with all the other EV makers. There's so many of them out there now, and that's what happens when you get increased competition. People try to gain market share by lowering the cost, and so when you lower the cost, that compresses margins. So there was a lot for the move to the downside. I'm actually kind of impressed that Tesla didn't drop farther on all those things we just discussed. It held 260, closed right at 260 on the low today. If we can hold 260, maybe go sideways, perhaps we can mount some momentum to try to run higher. It's hard to imagine where the catalyst is now, though, with all those things that were said. We did come down and fill this gap, so that gap got filled. We talk about that all the time as well. So the question in my mind is over the next week or two, can we hold 260? If not, the next little support, and it's not much, but the next little support there is at 240. And if we can't hold 240, then it gets real interesting. But at least 240 is where this wave 4 projection is. So if this is indeed the start of the wave 4 correction, then perhaps 240 is where we find footing. So watch 260. That doesn't hold, watch 240, and we'll go from there. And then Netflix is a little harder to understand, I think. I don't know if the expectation was just that there was the earnings report wasn't bad, and that's the questions that are being asked. Why the earnings report wasn't that bad, and I have to remember that good earnings are priced in ahead of time. But I think that there was maybe some unrealistic expectations. We used to talk about whisper numbers back when the market's rallying, and everybody's always beating earnings and the earnings forecast. But there's a whisper number that is going to come in even higher. And I think a little of that was playing in on Netflix being even more aggressive at going after the login sharing. They are doing some of that. Right? You probably have seen it. We've all shared logins with family and friends, and you get the message on there, is this your main location? And if so, would you like to send an invite to basically who you're sharing your login with, and then they can get in at a discounted price? Maybe they thought that there would have been more revenue from that they haven't been quite as aggressive going after it as of yet. And then I wonder, just myself, this is just my own speculation, the strike in Hollywood. What about content going forward? Is there going to be a draw off on content? Could that cost some subscribers down the road if there's not new content coming out with everyone in Hollywood, writers, actors, everybody on strike? Is that, are we going to get new content to move forward? So I think there was a few of those things. Now, the negative for me today on Netflix was there was follow through to that big downward move. And so now we have to start looking at the 420 level here, and likely, I don't think that holds. I think likely we'll be heading back down. That's what it seems like to me, that Netflix wants to come down towards this 400 level. That also coincides with the corrective level for the wave 4 as forecast by the LA wave algorithm. I think that makes some sense. It's a big round number, a little bit of support there. That's where the algo thinks that there's going to be some sort of a pricing. So I think that is something to look for. Now, we are a little bit oversold here short term with those big moves down. And perhaps we just hold the 50-day moving average around 410. Maybe we don't make it all the way to 400. And this is nothing more than a test of the 50-day moving average. We did get a little vertical here. Looks a lot like a blow off top. So, and we have those, you have some backing and filling and consolidation. I expect that out of Netflix. I did want to show you one of the international markets on the INDA. We've been talking about this in Trade Finder a lot. We have a lot of viewers from India, and we have a lot of subscribers from India at evotrader.com as well. But that market has just been amazing coming off the lows in March, and it's the ideal market. You hear me talk about this all the time. I love the 45-degree angle trends because the market always moves in impulses and corrections. That's the basis of Elliott wave. That's how the market works. And Elliott wave is the best at measuring impulses and corrections. Now, when you have a 45-degree angle on your trending move, the corrections tend to be less severe and the trend tends to hold better. A little bit of a back off the past couple of days since we talked about this on Trade Finder Tuesday night, but we are still holding above the 10-day moving average. So I think still all looks okay to me on the INDA. Watch that 10-day moving average if we can stay in this trend. At some point, there will be a wave 4, but my goodness, what a great move. That's been one of the best markets globally to view out there. So hopefully you like the videos and information. If you do, please remember to smash that like button, or better yet, hit subscribe and view us. You'll be notified when one of these videos is posted each and every week. So thanks, everybody. Have a great weekend. Look forward to talking again next week. Take care.
If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.